And welcome to Chapter 1, and that's an introduction to taxation and understanding the federal tax law. I'll be doing one of these overviews for every chapter, kind of going over very briefly how, hoping that it helps you with the with how to address it, how to, maneuver it, if you will. And I'm just hoping that it does give you some type of a direction on these. You always want to review the PowerPoints, but most of the information that is going to help you really is to actually read the chapter, because that's it's going to give you the meat of the information, right? That's where everything is going to be. So this is a good way to start. And then just read your chapter to make sure that you really grasp the chapter itself, right? The main topics. And so what I would suggest is that chapter 1 is going to be part of one of the quiz, right? So you will be quizzed on chapter 1. Chapter 1 is not going to be in your first exam. So this is not going to be tested again after the quiz. The quiz is basically 10 questions, true, false, multiple choice, and it's a pool of questions, and it'll address all the objectives, all the learning objectives in the chapter. So you don't know which one you're going to get. So I would suggest to basically just feel comfortable with the whole chapter, and that's where I'm going to head over. Is that the first thing that I would suggest is to just kind of look over the objectives. There's 2 slides, and it does show like a lot, right? But some of them are not, they're not maybe a page or so. And what I would suggest is look at these things, right? So it's explaining, describe, identify, explain, evaluate, classify, explain. These are the action words, right? So what you want to do at the end, if you really want to get most of the chapter, is that, after you read it, after you make your notes and so on, you want to see if you can actually explain the importance of taxation and applied methods for studying this topic, right? In your own words. You don't have to, necessarily memorize anything. Just in your own words, can you answer these objectives, right? Do you know what you're talking about? Can you actually answer them if they were ever asked? Like identify the different the different taxes, right? What are those the different taxes? What are those taxes that I need to know? So always start with the objectives, and then just look at it, right? Just review them. Then go read the chapter or go over the PowerPoints, and then come back and see if you can answer those questions, right? For some of you, that you may sound like, well, that's a lot of work. Of course it is. There is a lot of work, especially when it comes to taxation. It is a little bit confusing, but you don't have to write an essay. You don't have to say anything large or spend a lot of time. It's just looking at it, and in your own mind, can you answer it? Do you know what they're talking about? Can you actually picture what you just read, or know what they're talking about? And that'll help you understand the chapters as you read them. Okay, especially when we start hitting chapter 1 is very much conceptual, right? In its terminology and little introduction to things. There's not a lot of computation. So as we move forward with chapter 1, it's like it'll start getting more computations, right? There's going to be more computations, calculations, and so on. But anyway, so this is what I would suggest to start first, and then come back after you read it, and then try to see if you can answer these objectives in your own words, right? So I'm going to focus on the areas. Everything is important as far as I am concerned. And if I skip any of these PowerPoints, it does not mean that it is not important. It's just that they are straightforward, simple for you just to read and get the information. Okay. So I want to start first with the part of it is just that I already mentioned, the study taxation. I get a lot of questions from students asking me, how do I study for the exam, or how do I study for the homework? Or, they think that they would have to memorize a lot. and that is not the goal. The goal is for you to know the tax implications and how to use your textbook to answer the questions, right? And at the same time is understand the rules. I know this is going to be an open textbook, but I strongly suggest that as you're using your textbook, make your own notes, know exactly what the tax implication is, right? And then understand the rules, understand the computation, the rules, the terminology, things that you, if you close your book, that you could answer those things, like what's gross income, what's tax, what's the rules of dependency, and it'll start getting harder as we move on, especially after chapter 1. But that's what I would suggest to when you comes down to study taxation. Always start with the objectives, and then say, okay, what is the implication here, and then what is the rule? And I would transfer, as you're reading this, I would transfer and make my own notes. So when it comes down to doing your homework, doing the quiz, doing the exam, you can utilize your notes instead of your textbook, because that'll help you with time, okay? And then by the fact that you're actually writing it down, the notes, write them briefly, don't write too much, just write them briefly, short terms, short words, just to remind you. And then you can easily probably apply. And then maybe the law itself will start, it'll remain in your brain. Then if you just highlight, and then you're hoping to use the textbook for the homework. And to me, that's, just use it. I mean, I know we all learn very differently. It's up to you how you want to use it, but that's what I would suggest, is understand the rule. How do I apply it? How does it work? What does it mean? Instead of just highlighting and doing the homework. And then when it comes down to studying, it seems almost like an impossible accomplishment, right? It's like, I can't do this. This is too much. And that's what I would suggest from day one. Just, what's the law? What is it for? How do I apply it? Okay. And you'll know what I mean when it comes down to other chapters. But that's what I would suggest when it comes down to studying. We're going to be focusing on the tax compliance, because we have tax compliance, tax planning, and tax controversy. Tax compliance is what we're going to focus on, right? We're not going to focus so much on tax planning. We're not going to focus on tax controversies or anything like that. We just want to know, what is the law and how do I apply it? Okay, so we're going to focus most of it in this area. Read about the history of U.S. taxation. And then the federal tax revenues, most of the reason that we do taxation is to generate revenues, right? That is one of the objectives for the tax. So if you can see, 51% of it is coming from individual income taxes, and 37% is coming from payroll taxes. That's pretty large, right? When you compare it to the other categories, especially corporate income taxes. So they don't get their money from corporate tax, but they get it from individual income taxes. The tax system, like I said, it is a system. That's what you're learning. It is a system itself. It is part of the Constitution. They have Congress who has the power to tax. And then the 16th Amendment, it basically allows for an income tax. So they have the right to do, have the power to tax. And then this specific amendment is the one that focuses on income tax. And if you look at the system itself, I mean, the system looks pretty simple right here. You can start with this understanding, is that you have to figure out, what is my tax base? And then I have to multiply it by a tax rate. And then I'll figure out my tax liability. So it looks pretty simple, right? Tax base. The tax base is your taxable income. After you figure out your taxable income, You need to figure out what is my tax rate. Simple enough. You just multiply this. It is a little bit more complex than this, but I'm just, so you can just get your first idea out of the way. But it is just simple as that, right? You find your taxable income, you multiply your tax rate, and then you find out what you owe in taxes. This tax liability is what you computed to be what you owe in taxes. This one is not considering how much taxes you already paid or what tax credits you're allowed, or if you made estimated payments. All of those three will come into play to see whether you owe taxes at the end when you do your tax return, right? But you're going to have to do this process first to figure out what is it that you owe. Then you subtract what you already paid, maybe in withholdings, maybe in estimated payments, and maybe you qualify for some of the tax credits. All those three that I just mentioned will reduce this, right? Because it's going to be, and then if you over or underpaid, then that's what's going to show in your tax return that, okay, you still owe more taxes. You need to pay more taxes than what you already paid, or you paid too much and now you're going to get a refund. And I'll show you that in a few minutes because I have a formula that I want you to spend a lot of time on. But this is basically the point of it all, right? We need to get to this point, and we need to figure out what taxable income is. This is another area that I want you to pay close attention. It is considerations for the tax laws. We have the equity consideration, certainty, convenience, economy and collection. When it comes down to evaluating the tax structure, the tax law, when a law is developed and created and all of that, it has to have some type of consideration for that law, for that tax law. And it must follow some of these, right? So it's either going to have equity consideration, right? We want to make sure that everybody's equal, a certainty, and I want you to focus on that. Kind of read on these considerations. So pay attention to the tax principles. Then we have the major tax types. Because when we think about taxes, the first thing that we think of is income tax. But there's a lot of different taxes, right? So we have property taxes, transaction taxes. This is where we have the sales tax, right? Then you pay taxes on transfer at death. This is your estate tax. This is upon you passing, and if you left a lot of assets and your estate is at a certain level, then you may be subject to taxation. Then you have gift taxes. So the tax here is, the tax is paid by whoever's giving the gift, not the person receiving the gift. Is the person giving the gift, okay? There's a lot of law behind the gift taxes, and we're not gonna go too much into details regarding the gift tax because we covered that in Accounting 16. But it is there, read about it, get a feel for it, but don't spend a lot of time on it. I mean, I'll answer any of your questions, but we're not gonna focus too much on that. The only thing I can tell you is that if you receive a gift, which you will know when you get to chapter what is it, 5, I believe? It is the gift that you receive are non-taxable. They're excluded. Okay, that's the only thing I can tell you right now. That it relates to our class. But regarding the gift tax, we don't cover that in this class. Employment taxes. This has to do with your the payroll taxes that you pay, right? Especially if you're self-employed and you have employees. Right, then you're going to have to pay payroll taxes. and you have to pay FICA taxes. And if you're the employee, you still have to pay FICA taxes, right? That is your federal, that is your Social Security and your Medicare. So the employer matches whatever you pay. So whatever you pay in FICA, they will match it dollar for dollar, right? So that's another tax, which is not income tax, but it's Social Security and Medicare. Then you have other U.S. taxes and then proposed U.S. taxes. These are proposed. They're not necessarily laws yet. They're not something that you have to comply with. It is just a proposed U.S. taxes. And that's what it is. Do all of these affect you? Maybe, maybe not. If you don't own any property taxes, if you don't own any properties like a real estate or even a car, you do pay some taxes, property taxes for your house. If you have rental income, you have to pay property taxes on that property and so on. Transactions, we're talking about sales tax, like I mentioned that, and as you go down, it gives you a description of each. So here's the property taxes. Transaction taxes, here's the sales tax, right? Federal, excise taxes. We have federal and state. So what exactly is an excise tax? The excise is normally a tax that you pay on specific items. So if you buy that specific item, then you may be taxed on it. So it becomes part of the cost. So if you buy cigarettes, right? So if you buy cigarettes, there is a tax that you have to pay for buying this product, fuel, gasoline, and so on. And then the state or local may have their own. When they say local, they're talking about the city itself. It could be the city, it could be the county. We don't have a lot of these local, especially income tax, local income tax, because then we don't pay city tax, like for income taxes. Here's the sales tax, so it kind of gives you that information, severance taxes, taxes on transfers at death. Again, I mentioned it was the estate tax and inheritance tax. Just read as much as you can. I will answer any questions you may have, but we're not going to focus a lot on this. If you do want to know more, you may want to enroll in 16. We cover that a lot. Here's the federal estate tax. Unified transfer tax credit. Again, you may want to read on this if you want. It may be part of the quiz. Remember, I told you the questions are randomly selected. So it is possible that one of these questions will be related to those things covered in the chapter, but it will not go any further than that, right? It will not go any further than what is discussed in the chapter because it's just an introduction to it. But you may want to read on that. This is all related to estate tax liability. Anything, if when you pass and you end up with an estate that is over 11 million, right, you may end up with a tax, with an estate tax. But if your estate is less than this, you probably will not have any estate tax because you get a credit right off the bat. As if for 2021, the credit was up to 11.7. So if your estate is less than that, it'll wipe out whatever you have upon death. So you may not have any of the estate tax. So mostly this estate tax is mostly for very wealthy individuals. And of course, state has the same, right? Transfer on death, at death. Here's the federal gift tax. So you may want to go ahead and read on that. But just really, roughly, is that, if you don't want any of your gifts to be taxed, right? And this is you giving the gift, not you receiving the gift. So keep that in mind. So if you're giving a gift and you don't want any of that to be taxed, then you do have, this is by tax law, that you are allowed to exclude 15,000. So you can actually give $15,000 individually, whether it's a corporation, whether it's a charitable, whether it's a person, and it will not be taxable. It's excluded. And this is 15,000, not in total annual, it's 15,000 per person. Or per donee, I should say. So if I give somebody 20,000, then 5,000 becomes taxable, which may potentially force me to pay a gift tax. So what most people do, especially if you're wealthy enough, then you can give your kids 15,000 every year, and none of that is taxable, for the parents. It's not, gifts are not taxable for the recipient. So this way, neither one of them will have a tax. But there's more if you want to read a little bit more. But so income taxes. So this is where we're going to spend most of our time. Income taxes, right? So the requirement is for you to pay taxes as you go. So as you earn the money, technically you should be paying the tax. Okay. So if you're an employee, that's exactly what you're doing, right? So as soon as you get paid, your employer will withhold the taxes. Your employer will pay the taxes on your behalf. So you're good there. But if you're self-employed, nobody's withholding anything, right? So that means that you're going to have a good tax person or a good bookkeeper or both to figure out what is your net profits for the quarter. And then you would have to set up estimated tax payments. So that means that every quarter, as a self-employed individual, you're going to have to make an estimated tax payment or a quarterly payment to the IRS. So then you're in compliance. You're paying as you go. And this is where you're going to spend, this is the one that I was telling you that you want to spend a good time understanding this formula. Because this whole class is about understanding this formula and understanding basically the application of how to apply this formula. There's a lot of line items that we're going to cover individually, right? So chapter 3, we're going to go into applying the formula. Chapter 3 is about the formula itself. So they want to know if you know how to use this formula and see if you can figure out, these are going to be your big tops, right? So what is my adjusted gross income? What is my taxable income? And what is my, do I have taxes due? Do I have a refund, right? So chapter 3, we're gonna spend, obviously the whole chapter is gonna be about this, applying it and using it. Chapter 3 and 4 are gonna be focused on figuring out exactly what is income and exclusions. So all income, exclusions, and gross income will be part of chapter 3 and 4. So every single line item that you see here, we're going to focus, there's a chapter for each, if you will, because there's a lot to learn about every single section. But in chapter 3, it's going to be more about applying those numbers into the formula. So if you start with income, see how it says broadly defined. That means it is what income, in broadly defined, basically says worldwide. Okay, so as a US citizen, all the income that is increasing your wealth is part of this. It doesn't matter that your income comes from another country. It's 100% worldwide. So if you get income, right, that would be the first number, but then not every income is taxable. So then you're going to subtract whatever is not taxable. So then you subtract that, and then you'll arrive at your gross income. Then you have certain personal expenses that you can deduct. And they call those, deductions for adjusted gross income. So then you'll subtract it further, and then you do this minus that, you'll get adjusted gross income. And then now you have to figure out these two, itemize versus standard deduction. Which one is the greatest? Whichever is the highest, you're going to use, and you're going to use it to subtract this number further. In this, where it says less, see the first thing, it says personal and dependency exemptions. I want you to ignore that one. If you take a look, there's an asterisk right there. It says exemptions, deductions are not allowed between these years. So we're working with 2020. So obviously that's not, so exclude this. There's going to be nothing there. But then you have a deduction for qualified business income. This one, you will only have this if you are self-employed and you have a profit, or you have a pass-through, which we'll talk about that later. But if you have those business income and you have a profit, there's a certain percentage that you can deduct. So that'll reduce it further. So now that you have all of these numbers, you're going to take this number, subtract, subtract, subtract. See, less, less. So as soon as you apply those subtractions, you'll arrive at taxable income. Then now you're going to use the tax rate tables, which we're going to learn how to use. And then you're going to find out what your tax rate is. You'll find out your tax rate, apply it, and now you just calculated your tax liability. Then the next step is, well, did I pay any federal withholdings with my employer? Did I make estimated payments because I'm self-employed? Do I qualify for tax credits? All of those three, tax credits, withholdings, and estimated payments, you're going to add them all basically all together, and that's what you already paid. So this is your liability. This is what you owe in taxes. But this is what is going to be what you already paid throughout the year. And then it's just a simple math. This is what I owe, this is what I paid, and what is the outcome. If I paid more than what my tax liability says, then I am going to get a refund because I paid more than what I owe. But if I underpaid and my tax liability is higher than what I paid into it, then I'm going to have a tax due. I'm going to owe the difference. And see how this one says there's a brackets around it. If this had brackets, then that means this was a refund. But the fact that there is no brackets around it, that means it's tax due. I know we don't have any numbers here for me to confirm that, but that's how you want to read this, right? So pay attention to the brackets, because the brackets is telling you something. The bracket is telling you that if it's in brackets, because this is larger than that, then this would become a negative number, right? Which is brackets. The brackets represent a negative number or a subtraction. I shouldn't say a negative number. They're all positive numbers. They're just subtractions. Does that make sense? Okay, so just be careful. I'm sorry I said negative, because none of these are negative numbers. They're all positive numbers, but this is just an indication of a subtraction. So if my subtraction is bigger than this, that means that I would have a subtraction here at the bottom. And that would be a refund. But this one doesn't have it, so that means that I just have to assume that it's a tax due. So we're going to spend a lot of time. If you start doing this now, it'll help you a lot, because everything that we do in this class is going to be around this formula. Because that's what we're going to do. We're going to focus on the federal income tax. Then you can skip on the corporate tax. I know that it is possible that a multiple choice or some type of a quiz question may come up, but there's very little in this chapter about corporate income tax. Just read, and I would even say just focus on the fact that it's a flat rate of 21%. And just read a little bit about it, but don't spend too much time. We're not focusing on corporate tax. State income tax, same thing. We're not focusing on state income tax. We're only focusing on federal. So just read and learn as much as you can, but don't focus too much on it. Just cover it enough to cover you for maybe a quiz question. Same thing, we're not going to focus on local income taxes, so take the same steps as the state. Here I mentioned about the employment taxes is about the Social Security and the Medicare. That you as an employee, you pay 6.2 for Social Security, 1.45 of your income for Medicare. But the employer has to match 50% of that. So whatever you pay in FICA, the employer pays exactly the same amount. Other US taxes, right? Tariffs, levy. Here are the proposed US taxes. Again, they're not just proposed. I'm sure you have heard of flat tax, because right now it is proportionate, right? So it is, the more income you make, the bigger the tax rate is. The tax administration, obviously we know who the IRS is, right? At least I hope you do. But this is the agency that is responsible for enforcing the federal tax laws. How do they enforce it? Is that they're the ones that are going to be making sure that you filed your tax return, that you reported all your income, you're entitled to those deductions, making sure that you pay as you go, that you're following the tax law, and that's what they do. They're the ones who create the forms, the tax forms that you'll use to file your tax returns. So they are responsible for that. They're the ones who interpret the tax code. The IRS is not the tax law. They're just an agency that is responsible to enforcing it, but they're also issue, publications and things like that. But they're just basically just interpreting what the tax code is. The audit process, right? So most people want to know, okay, so what happens if I get audited? There's a small amount of tax returns that get audited, okay? They are randomly selected. They use some mathematical formulas and statistical sampling, and you never know who's going to get audited. It's not like some people think that, oh, my income is very little, very small, that I'm not going to be picked for audit, right? So they may not want to follow, or they may want to cheat the IRS by reporting fictitious numbers or deductions, thinking that, well, it's such a small amount that I am not going to get audited. And that is the wrong approach to take, because one, you're lying. You're basically committing a crime. You may not think it's a big crime because it's a small amount, but you're still committing a crime because you're not following the law. But the other thing is that you can still be selected, right? It is a formula. There is nobody sitting there saying, oh, this is a small amount, it doesn't get selected. It could be selected from their own system because it's randomly selected. The best thing I can tell you is just try to just report what you're supposed to report and pay your tax. Bottom line, right? Types of audits, you have correspondence, office audit, and field audit. Correspondence audit is the most typical. That means that you will get a letter from the IRS asking you to comply with some documentation. So if you're reporting some deductions, they may ask you to submit copies or things like that. So they're auditing you. but it's all through correspondence. So they'll send you a letter, they'll be requesting items, and then you're gonna have to reply and submit whatever they're asking you. And then you're gonna have to wait until they review your letter, your documents, and then they will finish their audit. If they don't believe you, they may reassess, and they'll tell you, okay, we can't allow this, so now you owe more tax. Or yes, okay, fine, we do accept your documentation, everything is good, okay? But everything is done through correspondence, through the mail. Then you have the office audit, which means that you will receive probably a letter, but it's not that you have to submit anything. This one you will receive a letter, but it's gonna ask you to attend one of their offices. You're gonna have to collect all your documents, whatever they're asking you for, and you're gonna have to basically go to an IRS office to do your presentation or present whatever they're asking you. The point is that you have to go to their office, okay? Then the field audit is that the IRS will come to your location. So now they're coming to you. That's the difference, right? So the most common, I would say, for individuals is the correspondence, but I have represented some clients and they have this office audit. That's the other one I have seen, where we have to take the documents to them. I haven't seen much of these field audits, but they do happen. They will come to, most of the times is for businesses, where they want to see the business itself, maybe invoices, your processes, your systems, right? So they will come to you instead of you coming to them. And the last thing you have, right, when it comes down to the audit, if you have to hire an attorney because you want to, there's a litigation with the IRS, then let's say you don't have an agreement with the IRS does not believe you, but you think that you have a case, then you may want to hire a tax attorney, and then you may have to go to court, right? So then you have the tax court, the federal district court, the court of federal claims, right? And then after that, if you want to appeal, you can appeal it and go to the Court of Appeals all the way up to the Supreme Court. Statute of limitations, basically you have 3 years. That's your statute of limitations. You have 3 years from the time that you file or the date that you, from later, okay, so basically it's from the later of the due date or the filing date. So you have 3 years. So if everything is fine after 3 years, technically they can't come after you. You can actually shred your tax returns after, after the third year. And that would be the end of it, right? If they find out, and when I say if, is the IRS. If the IRS finds out that you omitted more than 25% of the gross income, in other words, you lied about the income, more than 25, they could technically extend the statute of limitations from 3 years to 6 years. So this happens when you have either your own business, you may have rental property and you're collecting rent and you're not reporting 100% of it. And somehow they find out and somehow they know that you're omitting a lot. So if they find out that's the case, then they can actually reopen all the way up to 6 years. If they find out that it was a fraudulent, right? So you actually knew that, and your idea or your point was to commit fraud, right? Then there is no statute. They can open any year. So then you're basically stuck there, okay, with anything. When it comes down to asking for a refund, it's kind of the same thing, but it's 3 years from the date the return was filed, or 2 years from the date the tax was paid. Whichever is later. So if you are behind in filing your tax returns, then you're going to have to think about how many years. If you have not filed your tax return for 5 years and you you prepare your tax returns, and let's say the last 3 years were actually the last 2 years were actually you have a refund, then you're going to lose the refund because it's older than 3 years. And I have clients that have done that. They come to me and they said, I haven't filed for 5, sometimes they were 7 years. So I did their tax returns for 7 years. And I would almost, I'm trying to remember, but I think most of them were actually, they had a refund. And she ended up losing like the last 3 years. There was 7, so I'm talking about 4. She lost all those refunds, right? Because of the statute of limitations. So you don't want to be late, you know. And if you don't do them on late, you're always, if you file them late or you don't file, you know, again, that's also not being in compliance, which means that the IRS can assess interest penalties for not following that. And these are the 2 reasons, right? Failure to file, failure to pay. So if you do file your tax return on time, but you don't pay, then now the penalty is going to be this, the 0.5% per month, up to 25%. But if you don't file and you owe taxes, now you have both. So you just, you know, I know some people that say, oh, I know I'm going to file. I know I'm going to owe taxes, so I don't want to file. They're making it worse, you know. So you want to make sure that you file no matter what. And I think if you owe taxes, just do an installment and try to do the best that you can, because it can snowball, right, to a point that it could be a lot of money. And the IRS is not going to forgive you for any of that. You can't file for bankruptcy and say, I can't pay it. It'll stay with you. If it's regarding a fraud, the penalty is 75%. It's pretty high. Tax practice, honestly, I could just go, you can just go ahead and read on this, but it's all about being ethical standards, ethical practices. You may not be the tax professional, so it's not that it only applies for tax professional, but even yourself as you do your taxes, whether you do it yourself or you hire somebody to do them for you, you still want to make sure that you are reporting what you're supposed to report and be as transparent as possible, right? Just being ethical about the whole process, because if you do get audited, it can get pretty nasty. You don't want to mess with the IRS. So I would suggest to just be transparent, you know, just do the right thing. Ethical guidelines are issued by the American Institute of CPAs, the AICPA. You will get guidelines from the, you know, from the IRS. Like if for some reason you have no idea, what do they mean by ethical guidelines? What guidelines, right? Or what do I have to follow? You will find that in this textbook, they'll give you some ideas. So you have some ideas. The bottom line is that just be transparent, report what you're supposed to report. But since here they're talking about the practice, right? The professional practice of a tax preparer, but it still applies to individuals doing their own tax returns. Even if somebody else does your tax returns, you still have to make sure that you are in compliance with the tax law. Some of the other penalties that the tax preparer will get, right, is if they don't provide a copy of the return to the taxpayer, if they're endorsing a check, a refund check. So if you're getting a refund and you have a check and your tax preparer says, well, give me that check, just endorse it and give it to me, that's a problem. They'll get penalized. And then sign the return as a preparer. When they're actually, you know, no, this is not signing the return as a preparer, right? This is a failure too. You're failing to do this. Furnish identification numbers, you keep copies of the returns and maintain a client list and so on. So these will grant you will be subject to some of the penalties. And I think that's about it. So these are the considerations that I was talking about at the beginning. Here's the economic consideration. Pay attention to that. Here's the social considerations, equity considerations, and then about understanding how the tax law, considers, right, when they have to create a tax law. They may have to consider some of these aspects or these objectives. Okay, and that's about it. So I would suggest to start first with this, just to get a feel for it. After you go through the whole chapter, try to come back to the chapter objectives and see if you can answer some of these questions to get a feel for it. And then after that, I would suggest the next step would be take the quiz or do your homework, and then take the quiz and then make your notes. Make your notes better and better as you progress. Get them ready for the exam, if you will. Okay. Chapter 1 doesn't apply because I just told you that it's not part of the exam. But when you start touching on chapter 3 and future chapters, you want to start making those notes, that to use them for the exams and quizzes and homework. Okay, but if you have any other questions, please feel free to contact me as soon as possible. Okay, have a good one. Bye-bye.